Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 27th through January 31st. We're in part one of our weekly trading game plan for this week. We'll try to help you make money trading the January Federal Reserve interest rate decision. So we'll look at what we expect from the January Federal Reserve interest rate decision and talk about some strategies on how you can make money trading the January Federal Reserve interest rate decision. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for January 27th through January 31st. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos to the tools and resources we use to come up with our market analysis, our trading strategies, our trading ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plans. And you can also find a direct link to that publicly accessible Google Drive folder in the description box below. So firstly, we'll take a look at how the markets ended up on Friday, and then a breakdown of the major indices and the technology components. So we see the markets all declined on Friday after we had a pretty exuberant run that we'll see post-inauguration, pretty exuberant run. Slight correction retracement on Friday, so the Dow was down 0.32%, NASDAQ down 0.5%. S&P down about 0.3%, but we had pretty positive market on close green candles on all the major indices. Looks like we had some profit taking in the Mag 7, so most of the Mag 7s red, significant profit taking in NVIDIA. Lilly had a bounce, industrials down a little bit, financials rebounded a little bit. Again, most of the Mag 7s, so with the exception of Meta and Google, were down, so Meta and Google were up. Look at some of the new, look at the breakdown. So we had about a 50-50 split, 51% advancing, 45% declining. We had 86% new highs, only 14% new lows. Now got 54% above their 50-day moving average, about 46% below. And we've got 57.5 now above their 200-day, only 42% below. So markets did pick up after that exuberant post-inauguration rally. Welcome, Pond. Thank you for joining us. Sydney Osborne. Hope you all had a great trading week and are doing well. We look at some of the news. Insurers are dropping HOAs, threatening the condo market. Banks prepare to sell up $3 billion in X bonds or X loans next week. Dow slips at end of strong week. Tariff talks heat up. Seemingly rocky road. Surprise global rally by backing off on, again, tariffs. Tariffs were delayed. Stocks notch back-to-back weekly gains. So oil briefly retested 80, got rejected, broke all the way down below 75. So now 75 is a resistance point. You heard Trump talk about wanting lower oil prices, wanting Saudis, Middle East to pump more supply. So a lot of downward pressure on oil prices. Natural gas broke above 4. We'll see if it can hold that 4 level. If so, again, the long-term trend in natural gas is up. Still got very cold weather. Gold tested its 2,800 high and then got rejected, broke down a little bit. So it's still above that 2,750. So now range between 2,750 and 2,800. See all the futures currently pointing slightly down. Bond yields perked back up, headed back up to 5%, retraced slightly on Friday. So now we've got the 30 at 4.85, 10-year at 4.63, and the 5-year at 4.4. But again, bond prices had popped back up, and bond yields had popped up. Bond prices declined slightly this week. Bitcoin made another run at its all-time high around 107, 108, got rejected back down below 105. And we'll talk about the BOJ's interest rate decision. And we didn't really see much of an unravel of that yen carry trade, as we'll see. We'll look at that again. Welcome, Fairchild. Thank you for joining us. Hope you're doing well. We look at a breakdown of the major indices and then the technology components. And just a quick reminder, you can see these or access these screeners in our notes documents and also in the screener sheets of our ETFs and Watchlist Google Sheets. So major components, see again, exuberant post-inauguration rally, very similar to the post-election rally. Dow didn't quite make it up to its previous high, but it did make it above that 50-day moving average. So that'll provide some level of support. Still got some potential upside in the Dow to its previous high. IWM, not as much of an exuberant rally. Again, much more interest rate sensitive sector. So again, then we'll see more reaction out of the IWM based on the January Federal Reserve interest rate decision. You can see that 50-day moving average is providing resistance. So it's testing that 50-day, but that's turning down. So again, a potential downside in the IWM, particularly on our expectations from the January Federal Reserve interest rate decision. Pretty exuberant post-inauguration rally in the S&P. S&P made a couple new all-time highs, so it broke its post-election high, sitting right there at that top. So that may be a double top now, might get a slight correction back down to the 50-day moving average. Again, exuberant post-inauguration rally in the Qs, so it jumped up off its 50-day, didn't quite make it to its post-election high. So some potential upside, but again, some of the technologies may be interest rate sensitive, might see a correction back down to that 50-day moving average. Welcome, Ketan. Thank you for joining us. Hope you had a great trading week and are doing well. We look at a breakdown of the technology components. Again, we see that exuberant rally in ARK-K. ARK-K made a new 52-week high. We'll talk about tomorrow that we're looking to short that high using the SARK. So the inverse of the ARK-K ETF is SARK, SARK. So again, my humble opinion, I think that exuberant rally was a little overdone. And a lot of those stocks in ARK-K are money losing very high valuation stocks. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But again, I would expect a correction in ARK-K, particularly around the January Federal Reserve interest rate decision. Bangs, again, very exuberant jump on that post-inauguration rally. So it looks like they almost tested their previous high, big gap up. Many of the FANG stocks are reporting earnings this week. If any of them disappoint expectations, could see a major correction in the FANGs. So the inverse on FANG-U is FANG-D. So might be, again, right around those earnings of those FANG stocks, might be a significant short-term opportunity in the FANGs, although again, they typically buy the dip on the MAG 7 on the FANGs. Again, exuberant rally in biotechs. Again, they're going to be sensitive to interest rates. So could get a significant correction in biotech, again, on that January Federal Reserve interest rate decision. See, it's still got some room to its 50-day, so we could get a little bit more exuberant rally to the previous high to the 50-day. But then again, I would expect a correction on the Federal Reserve interest rate decision. Semiconductors, again, slight exuberant rally, not quite as exuberant. They did correct back down, headed back down to their 50-day. And there was this announcement of that Stargate building data centers, more need for AI chips, NVIDIA chips. I think part of that was that exuberant rally in the SOXL. TQQQ, just the leveraged on the NASDAQ, so it just behaved the same way as the NASDAQ. Again, not as significant of an exuberant pop in the broad technology. We did get a gap up above the 50-day moving average. Looks like it hit that upper trend line, got rejected, getting support from the 50-day, resistance from the upper trend line. So again, not as much movement in the broader technology. Looks like it tried, almost filled that gap. So again, just a tightening wedge on the broad technology. So I hope that helps. I see. Remind me again, Fairchild's asking about produce, and that has to do with tariffs as well. So when we get to ETFs, let's look at some of those agricultural ETFs related to potential tariffs on particularly Mexico, Canada, etc., and their impact on some of the agricultural sectors. So let's very quickly look at how the groups and sectors and industries performed this week in the Groups tab in FinViz. So on Friday, we see somewhat of a defensive bent. Some of the interest rate sensitive sectors got a rebound. So real estate, slight rebound. Utilities, some defensive. So again, rotation a little bit into defensives on Friday. Technology, energy down. Basic materials kind of flat. Correction in industrials. For the week, however, technology, again, the Mag 7, the FANGs, etc., were the strongest. Cyclicals, financials did well. Everybody except for energy. So again, we saw oil prices dropping, so energy still significantly lagging. Although for the month so far, energy is the leading sector. Again, laggards to leaders. We talked about that expected rotation back into energy. So we've seen that this month. But again, a rotation back out of energy the past week. Again, probably related to oil prices. For the month, all the sectors were in the green except defensive. So again, pretty good laggards to leaders rotation that we saw and talked about all the month of January. Look at industries. So beverages, okay, rebound in the beverage sector. We see some REITs. So again, bond yields retraced a little bit, got a rebound in gold and silver, steel. Again, many of the REITs rebounded on Friday. Most negative, copper, correct, some solar still negative. Again, very sensitive to interest rates. Again, oil, uranium corrected down somewhat. Again, semiconductors corrected down. Also, coke and coal we've been talking about, and we'll see that had a bounce and then corrected on Friday. This finance is being exacerbated. There's one like Japanese stock. Let's pop that open because I wondered what was causing that. And apparently it's this Japanese financial that had a huge jump that's skewing that whole sector. Uranium very positive. Some utilities. Most negative for the week, again, solar, copper, oil, pharmaceuticals. For the month, utilities, oil positive for the month, gold positive for the month, uranium positive for the month, some REITs slightly positive, most negative. Beverages, so again, Friday we saw that rebound in beverages. Consumer electronics, solar negative, some REITs pretty negative. Okay. Grab a drink. We'll talk about the economic data from last week, the upcoming economic data for next week. Firstly, I'll go over highlights, and then we'll look at the whole calendar. Grab a quick drink. So just a quick reminder, as soon as the important economic data comes out, important economic news, try to capture it as quickly as possible and post it in real time in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a free invite in the description box below. So you can see important economic data comes out, try to capture a screenshot from investing.com with raw data as important economic news comes out. So here we see the Bank of Japan raised interest rates. They raised it 25 basis points. Now the interest rate's 50 basis points, but that's the highest in 17 years. The yen jumps, but again, as we'll see in the futures, didn't have a sustained upward trend in the yen. We didn't get much of a unravel of that yen carry trade, and also again additional economic data. So our Discord is a great source for real-time economic news. Also, we have all kinds of channels where you can discuss trading different asset classes using different trading styles with all your fellow BeachBum traders 24/7. So we'd love to have you join and actively participate in our free Discord. So some of the highlights of the economic data from last week, not a whole lot, Monday through Wednesday. Again, Monday markets were closed for Martin Luther King Day, and it also was the inauguration. So we saw that post-inauguration euphoric rally Tuesday through Thursday. Thursday, we got jobless claims data, weekly jobless claims data, and they were actually a little worse. Initial claims higher than expectations, trending upward. Continuing claims also higher than expectations and trending upward. And the 4-week average is also trending upward. So we are seeing a little bit of weakening in the job market, not drastic. But possibly future impetus for the Fed cutting rates, but I don't think this is going to be enough with all the talk of tariffs possibly being inflationary, deportations possibly being inflationary, etc. So many of the Trump 2.0 policies we've been talking about are potentially inflationary. So again, I don't expect the Fed to be cutting in January, but we'll check the probabilities and look at the potential for future cuts. Talked about the Bank of Japan raising their interest rates. Also, Friday, we got Michigan sentiment data, and this was also a little bit negative. So the 1-year inflation expectations are still above 3%, although it's unchanged or it's as expected, but 1 year is still above 3%. 5 years went down a little bit, 3.2, but it's still above 3%. So the consumer is expecting significantly higher than inflation and the Fed's 2% target. So again, a negative in terms of inflation. So the Fed may need to deal with that with the consumer. Consumer expectations degraded a little bit, sentiment degraded a little bit in current conditions. So although we saw that exuberant rally in the markets, the consumer is not feeling as exuberant, and in fact, things are slightly deteriorating. So we'll look at the rest of the data from last week and then also the full calendar for next week. But again, Wednesday, we get the January Federal Reserve interest rate decision. We'll look at what the expectations is. Currently, it's at 4.5%. So again, at 2 o'clock, we'll get the FOMC statement, their interest rate decision. Then at 2:30, we'll get Powell's conference call. I expect a lot of questions. You heard Trump say he's demanding lower interest rates, and I expect there to be a lot of tension, a lot of questions around that. We'll see how Powell handles that, and also the discussions of potential inflationary pressures due to some of the Trump 2.0 policies. So there should be a volatile press conference in particular. So expect market volatility up and down based on not only the decision, but the comments, questions from the press conference. Also, we've got a lot of the FANG stocks, Mag 7s are reporting earnings this week. So on Wednesday, we've got Microsoft, Meta, and Tesla. And then on Thursday, we've got Apple and Amazon. So again, if any of these Mag 7s don't meet expectations, probably need to beat expectations. Anything negative they say could have a major downside impact on the markets if they're up their forecasts, beat earnings, etc. Could be stimulus for further highs in the markets. Also, just an FYI, the Chinese New Year begins on January 29th. It officially runs through February 12th, but I believe they're off for a week after January 29th. So this Wednesday, or the upcoming Wednesday to the following Wednesday, I believe the Chinese markets may be closed. Most Chinese businesses will be closed during the Chinese New Year celebration. So if we look at the whole calendar from last week, zoom that up some. So again, markets were closed on Monday for Martin Luther King Day. Tuesday, we just got some bond auctions, not too bad. Wednesday, we also got mortgage data, so mortgages are still 7%. Crude oil stocks up a little bit. Talked about continuing jobless claims data. Natural gas storage down, but less than expected. Again, trend in natural gas prices still up. Bond auctions, again, not too bad. Oil inventories down, but less than expected. Global composite PMI, a little bit less than expected, so a little bit weaker than expected. Existing home sales pretty much in line. We talked about Michigan sentiment. Oil rig count drops significantly, so six decline in oil rigs, 4 decline in total rigs, so possibly reducing U.S. supply, U.S. rigs, due to the downward pressure Trump is putting on oil prices, so less supply, trying to hold the prices up, keep their profits up. Got the calendar again for next week. So Monday we get some housing data. See if we're getting any strengthening in the housing market. Tuesday, durable goods, housing prices, HPI, some consumer confidence. Then again, Wednesday, we get mortgage data. But again, Wednesday, the big thing is going to be the Federal Reserve interest rate decision at 2, and then the FANG, the Mag 7's earnings. After most of them, I think, are all after market. Thursday, then we get GDP, PCE data. So again, right after the Fed makes their decision, we'll get some important inputs to see if they're going to cut further in the future. Natural gas storage, etc. Friday, we get core PCE, etc. So again, right after they make this decision, the market will be looking forward. We do not get an SCP, a dot plot from the January Federal Reserve interest rate decision. We will get one in March. So as you'll see after this week, so the next FOMC meeting is March 18, 19. That's the next time we'll get their economic projections, their dot plot. So again, we're not going to get a change in the trajectory during this decision. Although, again, we might hear Powell make some commentary during his press conference if they hold, which is my personal expectation for this meeting. We'll see if they're planning to cut and their reasons for cutting in March. Also, again, we're right in the heart of earnings season. So you heard I pulled out some of the Mag 7s, but we have tons of earning, many sectors. So I'd highly recommend you go through the earnings calendar, see who's reporting earnings when, how that might have impact your trading, your current positions. So again, tons of earnings, many sectors. Again, most of the focus is probably going to be on the Mag 7s, but any of these others may have an impact on that particular stock, that sector, sentiments, etc. And again, a lot of focus will be not only on if they meet or beat, but their forward guidance going forward for this year. Also, I'm sure there'll be a lot of questions about the potential impact of tariffs on these companies that may be sensitive to potential tariffs and how that may impact them going forward. So again, I'd highly recommend you check the calendar, the economics calendar in investing.com, and also we'll see the short calendar in Webull. Again, you can hear how we trade around earnings, how to make money trading when earnings matter via the link to the video and the notes. And many people now, since we're past the election, the inauguration, we kind of know the trajectory of the Fed. Now there's a lot more focus on earnings and forecasts, etc. So I think they'll have a much more bigger impact now on market volatility. So again, you can hear how to trade earnings via the link to our video in the notes. Okay, let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get up to 40 free fractional shares of stock by opening and funding your account with as little as $2,000. Under 2,000, you get 20 free fractional shares of stock, each worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, you can get your free fractional shares of stock. Also take advantage of any other promotions they have running currently, and also help support our BeachBum trading community, all of which we greatly appreciate. So I'm using the market screen in the online browser version of Webull. Firstly, we'll look at the histogram of advancers and decliners from Friday. So we'll see, even though the indices were slightly down, we had a pretty balanced advancers and decliners. Percentage of advancers very small, balanced out by a small percentage in decliners. So again, pretty balanced histogram, even though we saw, again, the indices down somewhat. Net flow, inflow has kind of reverted to our typical trend on Friday. So we got pretty zero, slightly positive inflow in the NYSE, and then a trending down outflow out of the NASDAQ. So typically that's what we've kind of seen on Fridays, probably a lot of profit taking in the Mag 7s, outflow out of the NASDAQ, slight inflow into the NYSE. Fear gauge now is neutral, so it had been in fear territory. We'll see we kind of bottomed out around 27 or so. So now market's very neutral, probably again headed into the January Federal Reserve interest rate decision. You can see we bottomed out probably around low 20s on the 14th, rebounded again, that post-inauguration rebound. We look at 3 months, so again, low was the 14th. We're not, anywhere near the exuberance from December, definitely trending up. So again, you can see this near-term earnings calendar in the calendar widget in Webull. You can flip to next week and go day by day, see who's reporting on a daily basis. So again, another great, and you can see what time they're reporting and also their expectations, etc. So again, another great way to keep a handle on near-term upcoming earnings on a daily basis. We'll look at the best performing industries for the week. So uranium, top performer for the week, LEU, URLI, UEC. So many of the uranium stocks that we watch, that we like. Retail pretty positive, JD.com, China, Wayfair rebounded, Macy's, biotech generally pretty positive, semiconductors pretty positive. These are AR, VR, Copen, Boozy, etc. IT positive, financial, healthcare pretty positive, media, construction, aerospace and defense pretty positive. Looks like more space stocks than defense. Construction, retail a little split. Software actually slightly negative. Get the ETFs. So down on the NASDAQ, that's the inverse on TQQQ, down on the Dow. So again, we got a bit of a correction on Friday, down in the S&P, down on the NASDAQ, up on Bitcoin, up on the Euro, short on small caps, short on the Russell. Negative on industrials and healthcare, up on financials, negative on energy, up on real estate, comm services, utilities, negative on technology, basic materials, lumber, copper, up. However, cyclicals pretty split, defensives very positive. Commodities, sugar up. Okay, just a quick reminder too, you can trade 24 by 5, 24 by 5 overnight trading in Webull. Get more information about overnight trading in Webull via the link to our video in the notes and also the topic posted in our Discord. You can also trade futures. Next, we'll look at the futures. You can trade futures in Webull as well. You can get more information about futures trading in Webull via the link in our notes. We look at the futures in FinViz. Again, we see these, post-inauguration exuberant rallies in all the major indices. Again, the Dow didn't quite reach its previous high, so might get a retest of the high in the Dow. S&P made some new highs, so again, might have, it looks like it rejected off that double top. So might get a little bit more correction in the S&P. NASDAQ broke its previous high, tested the high before that, 2,200, Looks like it rejected slightly off that, but again, some room on the upside to the previous high in the NASDAQ. Russell didn't quite make it up to the bottom of that previous um, support resistance level, 2350. Looks like it almost got there, tested, got rejected. Again, I'm going to be very much more sensitive to the January Federal Reserve interest rate decision. Nikkei actually positive, even though they raised interest rates slightly. European stock market and the DAX, both positive. Looks like they might have peaked out, might have a correction in both the Euro stocks and the DAX. VIX very low, so it's actually below 16. Let's look at the term structure in the VIX. I think it's in the 15s, maybe even in the 14s right now. So again, just a quick reminder, you can see links to the VIX term structures, as well as many of the other tools and resources we frequently use on our homepage, beachbumtrading.com, bum without the U. So if we find the VIX term structure, so right now, yeah, the VIX is 1485, so way down below 15 right now. VIX futures, I've got a contango, positive contango, significant space between the current VIX and its near-term futures. Again, upward trend in volatility, so projecting more volatility going forward. So again, my humble opinion, I think that retracement down to below 15 is a little bit overdone. Again, part of the exuberant post-inauguration rally. So if we look at the trend, so trend is up. But again, the VIX term structure says we should have more volatility going forward. Can I expect more volatility around the Mag 7 earnings, the Federal Reserve February or January interest rate decision, etc.? So up on volatility would be my expectation going forward. Might be a good opportunity again to pick up some low vol opportunities. I'll come back to ETFs. Let's talk about the making money trading the January Federal Reserve interest rate decision. Grab a quick drink and yeah, that's what we were just saying, right? K-Ton, VIX futures are cheap right now, so possibly a good opportunity. I'm gonna grab a drink and we'll look at the January Federal Reserve interest rate decision and how we can make money trading that. Okay, again, our theme for this week is making money trading the January Federal Reserve interest rate decision. So we'll look at the probability for Fed rate cuts, holds, hikes using the Fed rate monitoring tool and also the CME watch tool. And we've got several videos on how you can use the Fed rate monitoring tool and the CME watch tool to see the latest probabilities for various FOMC rate moves. And again, you can find links to these tools in the link section of our homepage at beachbumtrading.com. So at any time, if you want to see how the economic data reports are impacting the probabilities of various FOMC moves, you can access those at any time via our links on our homepage. So we'll open both of these up a second. We'll take a look at what the probabilities say for January and also going forward. So here's the Fed rate monitoring tool. Again, we get a countdown before the next Federal Reserve interest rate decision. So here's for January, almost a 98% chance of a hold. So almost no chance, 2% that they're going to cut, no percent chance that they're going to hike. So it's almost a certainty that they're going to do nothing. They're just going to hold. That would be my expectation. I don't think they're going to make any changes whatsoever. So even though Trump is demanding a Fed interest rate cut, they're not going to do it. Um, in fact, I think you're going to get some pushback from Powell from that statement about the independence of the Fed, that they don't take politics into account. They take full employment and price stability are their mandates. So again, I expect significant pushback on that, but a lot of questions, a lot of tension in those regards. So there was a slight probability of a hike, and you see that dropped off on Friday. So if we look at March, so come March, we've got a 27% chance of a 25 basis point cut. Got a 72% chance that they're still at 4.5. I'll hold even in March. So the probability is even a hold going through March. There's slight probability of a hike. Again, that probability of a hold increased slightly on Friday. If we look at May, as we get to May, still hold, over 50% chance they haven't made any change by May, 38% chance that they'll have a 25 basis point cut, and only 7% of a 50 basis point cut by May. So again, as we've been saying for a very long time, expect higher for longer. Should expect, about 4.5 rates all the way through May is the current probability. So we'll compare that to what we can see in the CME FedWatch tool. So if we look at the probabilities for January in the CME FedWatch tool, again, almost 80% chance of no change, 2% chance of a 25 basis point change. You go to May or in March, so 72% chance of continuing to hold, only 27% chance of a 25 basis point cut. So again, very probable they'll make no change in March. You go out to May, still over 50% chance of a hold, 39% chance of a 25 basis point cut, and a 7 or 8% chance of a 50 basis point cut. So again, probability is higher for longer that they're just going to hold all the way through May. If I can look, I'll look at June. So by June, it's much more spread. Got the majority probability of a 25 basis point cut all the way into June. So again, 4.25 to 4.5 is the probability all the way into June. So again, expect higher for longer. Again, that's going to put a lot of pressure on money losing small cap stocks, real estate, all your interest rate sensitive companies, sectors that were expecting more rate cuts, that were expecting rates to come down. The probabilities in both of these tools say the market doesn't expect the Fed to lower rates significantly, again, all the way through June. So should trade accordingly. So again, we'll watch those tools as the important economic data comes out, see how it shifts those probabilities. But again, the market's currently saying we're going to be at 4.5, most probability potentially all the way through June. So we've also been talking about how to make money trading in January for a while, and you can hear all those videos via the links in the notes. Once we get out of January, we'll see what the January barometer says for this year going forward. So we'll take a look at that. Also last week and going all the way back pre-election, we've been talking about how to make money trading Trump 2.0. So please refer back to our trading strategies, trade ideas, and hopefully you were able to make some money trading during the comments in the inauguration, post-inauguration, etc., with our trading strategies of trading Trump 2.0. Also about trading during the winter, so you can access those videos via the historical trends for trading in the winter via the links in the videos. So now I'm going to go back to ETFs. So if anyone in the chat has additional ETFs you want to look at, topics, indices, trade ideas, etc., once we identify a potential trade idea, be it long or short, then we could jump to our ETFs Google sheet, find an ETF with the risk reward profile, the leverage, etc., the composition that we would like to trade that trade idea, be it long or short. And again, you can do likewise, get 24/7 access to our ETFs Google sheet by joining our Patreon. So again, let me grab a drink and check the chat, and we'll see, look at a variety of ETFs to trade some of these trade ideas. Okay, firstly, I want to look at one new ETF that I added to our ETFs sheet that I think has a interesting concept, interesting theme, particularly we talk about cheaper oil, Trump pushing for cheaper oil, pushing the Saudis, the OPEC to pump more. And I found this BWET, which is a breakaway tanker shipping ETF. So it has to do with uh, mostly oil shipping. Also, it's related to BDRY, which we've been talking about watching for a while, which is dry bulk shipping. So I categorize both of those under the shipping category. We've got now shipping tankers and shipping dry bulk. So let's take a quick look at BWET. In our main ETFs sheet. I'll just do a find, go directly down to the shipping category. So now you can again see BDRY in the shipping dry bulk and BWET in the shipping tankers. So you see right now it's at about 1070. It's a little bit above support at about 9. See, it does look interesting. BDRY is one we've traded recently. We'll probably trade again. So you can see both of those are showing a positive risk return opportunity right now. See, BWET, it's got about a 2.3 risk reward profile, 2.5 bottom to top. Let's look at it first in FinViz. Quick reminder, you can also find links to FinViz, other tools, and resources on our homepage. So we'll open up the link to FinViz. Here's BWET, breakwave tanker shipping. So you see it had gone down significantly, popped back up to that resistance level. It's now got, and then it broke back down below its 50-day. So again, pretty volatile. It is optionable. It's a bit expensive, 3.5% expense, a little expensive, a very small AUM. So this is not a very popular ETF. Again, you can see volatility, light trading, very low volume, only 5K in volume. So, expect a lot of volatility, bid-ask price spreads, choppy trading. But again, if we zoom out a little bit, see, it's got some nice some nice price action, goes from 10 to 14 pretty quickly. Got potential upside into the low 20s. Hasn't been around that long, so again, not super popular. Only been around since 23. Look at its composition. I thought this was really interesting. And again, we talk about the volatility with oil, with OPEC. You can see they're investing in different contracts with shipping oil to various areas. So you've got Middle East to China, and you've got West Africa to the US. You see their allocations. So very sensitive to oil demand for China. So if we do see a GDP pickup in China, that should be positive for the tankers. Also, if, in my humble opinion, if the Saudis do start pumping more, that should be positive for tanker prices, get more demand for tankers, and again, potential upside with this BWET. So again, if we see more shipping, more out of OPEC, that might be a positive catalyst for BWET. So again, I thought that would be an interesting one to add to our ETFs Google Sheet. So you can see it's a daily change in prices of tanker freight futures. You saw the different futures that it's tracking, and heavily on China right now, and then the US. So shipping crude, specific size, cargo ship, etc., specific routes. So again, if we see more supply coming out of the Middle East or more going to China, that could be positives for BWET. So let me know what you think of this one as a trade idea, or again, more oil supply coming out of OPEC, going to China, etc. If you traded this tanker shipping ETF with BWET, please let us know your thoughts in the comments to the video, in our Discord, etc. What do you think of BWET? And what do you think the catalysts and opportunities for this shipping ETF and also dry bulk shipping? Again, now you can find both of those in the shipping category in our ETFs Google Sheet. So someone was asking about some agricultural products. Just highlight some of those. Probably one of the most popular, probably DBA. So if we do a search for DBA, DBA is a broad agricultural fund. You know, a number of our BeachBum traders like DBA. You can see it's kind of in the middle of its range. Not a whole lot of risk reward ratio right now, but if you think there's further upside, it's pretty close to its 52-week high. So again, possibly front running some of those potential tariffs that agricultural products are going to go up. Other categories you can look at are specific countries. And before I forget, I had a question, so I want to jump to that as well. But some of the specific countries that may be impacted by tariffs is Brazil, Mexico, etc. Now, Brazil, haven't heard specific mention by Trump of tariffs on Brazil, but they're one of the leading members of the BRICS, BRICS. It's Brazil, Russia, India, China, South Africa, the original founders of BRICS. So if he is going to tariff or put pressure on the BRICS nations, that might negatively impact Brazil. A lot of products come out of Brazil, soybeans, wheat, etc. So it could be, again, a negative for Brazil. Also Mexico. So Mexico popped up. He kind of lightened his stance on Mexico a little bit, and it did pop up, but that can change. You know, he tends to be very volatile on a whim, and if his view on Mexico turns down, slaps tariffs on Mexico, could be very negative for Mexico. Also products I've heard, you know, avocados, tomatoes, etc., as well as a lot of manufacturing, you know, car makers, etc., do manufacturing in Mexico. So if he slaps tariffs broadly on Mexico, it'll be negative for those countries. Again, the past weeks and months, we've been talking about countries and companies potentially impacted by tariffs, and to be wary of those and how they might impact those countries. The other one I had a question on this week I want to address before we run out of time is Pangs11 asked in a comment to our video on the Argentinian ETF ARGT. How do we rate ARGT now? I want to take a quick look at ARGT. So that's in our research sheet. So again, we have all kinds of additional ETFs in our research sheet. So you can find other countries, other ETFs, including single stock ETFs in our research sheet. So if we look at ARGT, see right now it's at 86, 52-week highs at 91, so it's pretty high right now. Look at it in FinViz as well. So we see it's had a nice steady trend up, hugging that lower trend line, 52-week or 52-day moving average trending up very nicely, 200 trending up, so very positive trend in ARGT. It's been trending up for a long time, so back mid-2022, nice upward trend in ARGT, so very positive in Argentina. Yearly performance 67.5, so does pay a small dividend. Again, very close to its all-time high, very nice, almost parabolic positive trend. So if you think that trend will continue going forward, again, looks like it's got plenty of support, both from the trend line, 50-day moving average, a nice upward trend in the ARGT. And if you think this performance will continue, I don't know offhand. I haven't heard any talk of tariffs on ARGT on Argentina. I don't know of any negative catalysts that would impact them. They had their election. They imposed a lot of changes to their finances, all positive catalysts for that ETF, for their stock market. You see the majority in ARGT is Mercado Libre. That's the South American version of Amazon. I know a lot of people like Mercado Libre. Melly, see banks, some mining. That's another bank. So again, trend's very strong. If you think it'll continue, good momentum. So again, if you think that trend will continue in ARGT, might not be a bad if you can catch a dip. That could be pretty positive. Again, does pay a small dividend as well. So I hope that answers the question that Pangs11 asked about how we rate ARGT now. Please let us know what you think of ARGT. Have you traded it? Are you trading it? Do you think this trend in Argentina will be continue? Do you have any additional information, negative or positive, regarding Argentina? Please let us know. So if anyone else has any others, well, we talked about gold. Gold's again bounced up to that 2,800. Maybe long and short gold, silver, etc. Various countries. So also I was looking at India. It's kind of getting close to its 52-week low. Not a whole lot of risk reward at that level. But again, if you think India is going to rebound, again, another BRICS nation, so could be impacted by comments on BRICS. So again, a lot of these comments on tariffs, etc. various currencies. So we've got the various currencies. You can also find other currency ETFs in our ETF database sheet. So we saw a number of the currencies, Canadian dollar, etc., euro, down quite a bit. Again, we didn't see a whole lot of rebound in the yen. A little bit of a bounce on that BOJ decision, but retraced pretty quickly, kind of in that area consolidation. We didn't really see that yen carry trade unravel do much. And a lot of the other currencies rebounded slightly. Dollar weakened a little bit. And we saw bond prices rebound. Yields retrace a little bit. And we don't expect any change in interest rates. So we'll see what impact that has on bond prices. Talked about, tariffs on Canada, impact lumber. Wheat tested got close to testing its previous high, rejected, trending back down. Again, DBA covers things like cattle as well as various agricultural products. Talked about coal. So talked about Met-C with coal we're watching. Also there's BTU. Also have the coal ETF. So again, you can find additional ETFs in our research sheet for additional commodities, etc., and compare those to. So you can see coal. Trump came out with positive comments on coal. I'm sure that caused a little bit of a bounce. It definitely caused a bounce in Met-C. So again, we've got the long and short ETFs for all the technology components, all the different indices, etc. So particularly around the January Fed interest rate decision, if you have an opinion on the reaction of the various components, also earnings. So we've got, the FANGs, FANG-D, FANG-U. So plenty of opportunities even for short-term day traders, etc., to take advantage of the volatility in any direction using our ETFs and our ETF Google Sheet. So again, there's sugar. So again, tariffs could impact any of these commodities. So if you hear of a comment on a potential tariff on a particular commodity and you're looking for an ETF to long or short based on that trade idea, you can find those in our ETFs Google Sheet. Again, volatility is pretty low, so a couple of options for trading volatility long, VXX, UVXY. If you want to hold the short on volatility and collect dividends, SVOL. Again, we saw wheat retrace a little bit, but it's a little bit above 52-week low. It comes back down. We long wheat again with WAT. I think Katon was mentioning looking at water last week. Water's still kind of in the middle of its range. Do have this ETF on water resources. Again, the yen didn't really pop up as much as we thought it might on the yen carry trade, maybe more upside in the yen. So you could trade that with YCL or FXY. So if there's any other ETFs you'd like us to take a look at, do research on, etc., please put those in the comments to our video or in our Discord. Tag us in our Discord or beachbumtrading.com or BeachBum Trading, all lowercase, no other character symbols, etc. Anyone else is an imposter, please report and ignore them. And please let us know what we can do to continue to improve our weekly trading game plans, any of our videos, our tools, etc., our community. We really need your feedback on what we can do to add more value for all of our BeachBum traders. We hope that you like this content. Please smash the like button on our videos. Help us try to get the YouTube algorithm to show us some love someday and share our videos and continue to build our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. We also really need your help to share our content, repost our content on your social media sites, etc. Invite your fellow traders to join us in the live chat, join us in our Discord, continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you again to everyone that participated in the chat today, to everyone that's watching after the fact. We hope you'll come back again tomorrow, where we'll take all these trade ideas for making money trading the January Federal Reserve interest rate decision, and we'll select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So thank you again for watching and for your participation. And we hope to see you all again tomorrow, 10 a.m. for Eastern Time for part 2 of our weekly trading game plan for this trading week. Thank you again and have a great day.